The world economy and markets are quite jittery because there is already Russia-Ukraine war, Israel-Palestine war, which have not yet ended, and we are already hearing about Israel-Iran. Today we are going to see how to invest like Warren Buffett during these kind of uncertain period, because Warren Buffett has successfully invested during the World War II itself. To understand Buffett's style of investing during wartime, we need to time travel to 1942 when there was World War II. In the midst of this uncertain period, the young Warren Buffett made a decision that would not only shape his own investment journey but also impart timeless lessons that continue to resonate even today. Picture the young Warren Buffett armed with only a modest sum of capital accumulated over several years. Despite the prevailing pessimism and dire headlines filling the newspapers, Buffett remained undeterred in his belief in the resilience of American business and enduring strength of the country's economy. In the face of adversity, Buffett saw the opportunity. He identified City Services preferred stock, a company whose shares had plummeted in value amidst the prevailing uncertainty. Recognizing the inherent value in the company's assets and its potential for long-term growth, Buffett made a bold move. On March 10, 1942, he took the plunge and purchased 3 shares of City Services preferred stock at $38.25. However, the fate had a twist in store for Buffett. The very next day, the stock market experienced a significant downturn, with the Dow Jones Industrial Average itself dropping over 100 points. So Buffett's newly acquired shares saw an immediate decline in value, reflecting the volatile nature of the times. In the face of adversity, Buffett remained resolute instead of panicking, and he maintained his conviction in the long-term prospects of City Services preferred stock and also the American businesses as a whole. Despite the initial setback, Buffett held on to his investment, demonstrating a remarkable level of patience and discipline. The 12-year-old Warren Buffett waited for a few months, and the share price started bouncing. Warren Buffett sells 3 of those shares by July itself for about $40, pocketing a gain of $5.25. But he was not happy because later, City Service preferred price started going up so high, it even crossed about $200 in a matter of about 4 years. Reflecting on his experience, Buffett acknowledged the importance of maintaining a long-term perspective in investing. He learned that short-term market fluctuations are often noise that distracts from the underlying fundamentals of businesses. Buffett's journey in 1942 served as a formative lesson, shaping his investment philosophy for years to come. In the year 2018 Berkshire Hathaway annual general meeting, Buffett had shared this incredible investment experience that he faced during the World War time 1942. The lesson learned at the age of 12 years really shaped the way Warren Buffett started investing later. Further, Buffett explained in the annual general body meeting, if someone had invested simply S&P 500, any of the index funds, $10,000 in the year 1942, untouched, would have become $51 million. He explains why having a long-term perspective is so important through this experience. Today, Buffett's approach to investing remains grounded in these timeless principles. He continues to advocate for patience, discipline, and focus on the long-term fundamentals of businesses. Buffett's story in 1942 serves as a testament to the enduring power of conviction and the rewards that come to those who stay the course. The current situation is no different from what Warren Buffett experienced during World War II. Today, there are 2 declared wars in progress, and there is a third threat of potential war between Israel and Iran, which brings greater uncertainty of our times. Remember one thing, despite all these odds and global cues, India is really in a sweet spot. We are seeing the strong growth of our economy, GDP growth, and multifold development across the country. Investing like Warren Buffett during wartime involves adopting some of the key principles and strategies that Buffett himself has employed throughout his career. Today we are going to see how we can invest like Warren Buffett during wartime with 10 different principles. Focus on quality companies. Buffett is known for investing in high quality, well managed companies with durable competitive advantages, also known as economic moats. During wartime, focus on these companies that have strong fundamentals, stable earnings, and proven track record of navigating challenging economic environments. The second important principle is to keep long-term perspective. Buffett is a long-term investor who looks beyond short-term market fluctuations. During war, maintain a long-term perspective and avoid making impulsive investment decisions based on temporary geopolitical tensions or market volatility. Warren Buffett follows a value investing approach which involves buying stocks that are trading at a discount to their intrinsic value. Look for opportunities to invest in undervalued companies with strong fundamentals that are temporarily affected by wartime uncertainties. Warren Buffett emphasizes the importance of investing with a margin of safety, which means buying stocks at prices significantly below their intrinsic value to protect against downside risk. During war, prioritize investments that offer a margin of safety to withstand potential market disruptions. Warren Buffett maintains a significant cash reserve to take advantage of investment opportunities that may arise during market downturns or crises. During wartime, consider holding cash or cash equivalents to capitalize on attractive investment opportunities as they emerge. There is a famous saying from Buffett, when the whole world is greedy, be fearful, and the world is fearful, you be greedy. So Buffett famously advises investors to be greedy when these kind of uncertain times. During war, maintain a rational and disciplined approach to investing, avoiding emotional decisions driven by fear or panic. Buffett advocates for a concentrated portfolio of investments in companies that an investor understands well. However, he also emphasizes the importance of diversification to reduce risk. During war, diversify your investments across different sectors and industries to mitigate geopolitical risk. So this is the real good time to look at your portfolio and diversify well. Buffett places a strong emphasis on investing in companies with trustworthy, capable management teams. During wartime, prioritize companies led by experienced and capable management teams capable of navigating through challenging economic conditions. I think this is an important advice he gives. Buffett advises investors to ignore short-term market noise and focus on the underlying fundamentals of the businesses they invest in. During war, avoid getting swayed by sensationalist headlines or short-term market fluctuations and instead focus on the long-term prospects of your investments. Buffett is known for his insatiable curiosity and commitment to lifelong learning. During wartime, stay informed about geopolitical developments, economic indicators, and market trends. Continuously educate yourself about different industries and investment opportunities and be prepared to adapt your investment strategy based on changing market conditions. Embrace a growth mindset and always seek to improve your investment knowledge and skills. This really goes well with for our current time. Like for example, there are a number of ships are built in India and we can really look at those companies. And similarly, drone making companies, semiconductor making companies, and also a lot of defense specific plays that are doing so well because there is enormous cash coming into these companies. We will be also looking at all these undervalued companies in India in a different video shortly. By following these principles and strategies, investors can adopt an investment approach similar to Warren Buffett's during wartime, focusing on high quality companies, maintaining a long term perspective, and staying disciplined amidst market uncertainties. Thank you so much for watching this video. Hope this video is useful to you. If so, please click the like button and share your feedback in the comment section. And if you are not subscribed, please subscribe.